Hey guys, welcome to today's daily premium newsletter for February 12th. Yesterday we put out a video detailing the need to move funds off exchanges if you are at all serious about their security. It may seem like we're on a warpath recently, but our intentions are to help you navigate away from the spike pits and quicksand in crypto. For those keeping score, we recommend staying away from the following exchanges: BitGrail, Bitfinex, and Yobit. Next up on our blacklist are HitBTC and Mercatox. HitBTC has been locking people out of their funds for several months now, using various techniques. While nothing is definitive at this point, locking accounts and delaying fund withdrawal is a bad sign and could point toward a hack and subsequent insolvency. The same thing seems to be happening over at Mercatox, where users are unable to withdraw their funds and there's been radio silence from the owners. Couple this with the fact that millions of the stolen Nano from BitGrail was sent to an account on Mercatox, and it seems like there's some very suspicious actions and inactions afoot. Again, storing your crypto, especially on smaller exchanges, is not an idea congruent to crypto security. Just like fiat, you can have trading accessibility or you can have security, but you can't have both currently. If you want to keep your tier 3 and tier 4 positions on exchanges because there isn't adequate wallet support or the position is small enough that you're okay losing it, that's an acceptable plan so long as you understand the risks. As far as we're concerned, every one of our tier 1 and tier 2 coins are safely locked up, especially the coins that earn staking dividends as incentive for doing so. As far as where to store your crypto, we like multi-coin wallets such as Exodus, Engine, Jax, and the mobile app Coinomi. We like myetherwallet.com for Ethereum and ERC20 coins, despite the recent drama regarding their owners. Additionally, hardware wallets currently support a small number of coins, but we see them as the most secure form of storing crypto, outside of writing down your private key on a piece of paper. While the market seems to have collected itself after our yearly all-time low last week, what we saw today is a new record low for the 24-hour trading volume this year, indicating to us that the market has become quiet as both the bulls and bears are waiting in anticipation for the next bell to toll. Last week's news regarding the CFTC and SEC session has mostly quieted the chatter and FUD regarding regulations. They're the ever-present boon or doom of crypto, and most inexperienced traders panic at the notion that crypto will be banned. Given the normal volatility of crypto, it's easy to think of times like these as the calm before the storm. But really, these moments should be where you can do your best research and strategy. Peaceful moments are rare in crypto, so enjoy this moment of brevity while we all collect ourselves. Now I'll turn it over to Doc.
Hey folks, it's Doc for ReadySetCrypto. What I'm going to do today is a little bit different. I'm going to go through our entire portfolio, or the portfolio that I'm able to currently chart with TradingView. Now, the reason I can't chart all of these on TradingView is not all of these are on major exchanges. Some of the tier 3, tier 4 holdings that we have are on smaller exchanges that apparently TradingView doesn't pick up the data feed from them. But you can always get a chart, like I showed in yesterday's report. You can always get a chart from coinmarketcap.com. So right off the bat, I'm skipping Bitcoin because we don't currently hold any Bitcoin. We do, however, hold Ethereum. And as I start off in Ethereum, what I'm seeing is a shallow downtrend with lower highs and lower lows. If we were to take a look at this on the weekly chart, we would see that this is actually, and this doesn't show it all that well, but right now what this looks like to me is more of a larger time frame bull flag. So this is a bullish consolidation pattern. Let's go back to the daily chart, take another look at this. Bullish consolidation pattern, and right now we are starting to see a little bit more volume. Now, if this was truly a bull flag, what we would see is that volume would taper off as we got near the end of the flag, and then we'd see big volume on the breakout. So we're starting to see bigger volume on the dip back down as the price has retested about the $500-600 area down here. This is where we got some big volume coming in. And right now what I'm seeing is the potential for a 1, 2, 3 pattern. So this is the old 1, 2, 3, where it goes 1, 2, and then 3 is above there. So that's also the same thing as me saying a former downtrend starts to show a higher low and a higher high, and there's your change in polarity reversal back up to the upside. So watch in this case for a break above the $900 level. And then even after that happens, though, it's going to have to contend with this trend line and about the $1,000 level. So Ethereum's got some work in it. This is just a consolidation within a larger time frame consolidation pattern. Okay, here's Litecoin. Litecoin has been in this long, torturous pullback here, and we're starting to see some potential life, a little bit more volume over here. We're starting to see this break above trend lines. It's not blasting off from here. I'm going to look for that 1, 2, 3 pattern to show new highs, and that's going to be basically as it breaks above about 165 or so, if it's able to make new highs on there. So you'd like to see volume in that area as new accumulation kicks in. Okay, so that's Litecoin. Here is Neo. Neo is in kind of the same pattern, imagine this, as Ethereum. Almost exactly the same pattern. And it's showing the same kind of volume pattern, so I'm not going to go into this one as well too, but Neo needs to break above 120, and then it's got the next obstacle overhead, which is this overhead trend line, which is currently at about 140. By the time it hits that, though, if it does get up there, it's going to be closer to 135. Walton Chain is after that parabolic run. It's just working itself down. Let's go over to the larger time frame chart, the weekly chart, to see if we can see anything there. And we did flirt with exhaustion on the way back up, so this is just a larger time frame consolidation on Walton Chain. Okay, so no fears there. Icon is pretty sloppy chart, working itself down. This is not what I would call a bull flag. This is more of the beginning of a reversal. But right now, what you need to watch for is right in this area. Within this box, it's either going to break out to the upside, print a higher low, and show a reversal, or it's going to simply fall out to the bottom of the box, and that's going to make this with a lower high and a continuation pattern to the downside within this channel. Now, notice the way that I just did that. I did not predict the future. I don't know what the future is going to be on any particular chart. So, a lot of folks will write in and say, hey, didn't you see this pattern there, and didn't this tell you about some indication of the future? And most of those people asking those questions are talking their own books. In other words, they want me to say something positive about their portfolio holding in hopes that perhaps it's going to change the future somehow. Can't really do that, unfortunately. The best way you can do things is to box things in like this. Make it objective for yourself. Remember, you're not trading against the market. You're trading against yourself and your own biases, and also the biases that other people have infected you with. So the best way that you can do that or get around that is to box in the price like that and say, if it goes higher, this is what I'm going to do. If it goes lower, this is what I'm going to do. I don't care which way it's going to go. Or I don't know which way it's going to go. Perhaps I do care. But again, with risk management, the proper risk management, you won't care that much. Next one up is ELF. Not much of a pattern here. Descending patterns break to the upside. Eventually, we'll see if and when it wants to do that. Nulls, and we're going to see the same type of pattern with just about every coin that we're going to look at tonight. Just about every coin is in a slightly descending consolidation pattern. Here is app coins. Hard to pick out a pattern out of this one. Here is Navcoin. Now, Navcoin is starting to break to the upside, but what I would expect from here is, and the way that this shooting star setup is, that I would expect this to fade back down here. Can do anything it wants to. Perhaps it's going to print a higher low and then reverse, but right now that doesn't seem all that great. Not a whole lot of volume in the breakout here either. All the volume is back here with Navcoin. Here is Kyber Network, and what I'm going to do for Kyber Network is kind of move in on the short-term stuff here. This ascending pattern is breaking to the downside right now, so doesn't look particularly good for Kyber right now. Omisigo is breaking out. This descending pattern is showing a potential 1, 2, 3 long here if and when it's able to get above, let's just say for safety's sake, about 14 would be that reversal. And a higher low, higher high combination, that would be good. That would be really good for Omisigo. Okay, here is Wabi. I can't pick out anything from this. Let's pull this back, and there we go. There's the same descending pattern that everything else has got. Surprise, surprise. Somebody was asking me recently, hey, what happens if Bitcoin takes off? Is that going to affect all of the altcoins? Are they going to sell off in deference to Bitcoin? And I would say at this point, a rising tide is going to raise all ships out there. It's usually only when Bitcoin is going through a forward-looking hard fork that we see a lot of the altcoins sell off. People are raising cash to put back into Bitcoin prior to the fork. We haven't seen that for a while now, but that's the sort of thing that we do see from time to time, is that when there's a run on Bitcoin, sometimes people will cash in their alts to get in on that. And you'll see that from time to time in particular coins. So if anything does fork in one of the big major coins, you'll see the same exact thing happening. But for right now, a rising tide raises all ships. Here is Modem. Modem is showing almost exactly the same thing as everything else. Tried to break out. Look at this candle here. Hard to see it. Let's see if I can zoom in there. You can see all the big volume on this candle. Went way up here and then sold off, unfortunately. So was not able to get any traction on the way up. Fell back down inside the hole. That, again, was Modem. And then we've got the Binance coin. The Binance coin, there's no pattern here. So even though it did break the descending trend line here, there's no volume, there's no explosion here. This is just consolidation. Here is Chainlink. Chainlink is showing about the same pattern as everybody else. Here is Loopring. Not much of a pattern here. Now, for something completely different, here is Ripple. So Ripple is showing a bit more promise than just about anything that I've looked at tonight so far. So Ripple is showing more promise than just about anything I've looked at so far. So a huge correction here, coming all the way back down, pretty close to my buy point as well too. But look at the volume here. So the volume on Ripple has actually really been good and is threatening that 1, 2, 3 pattern, certainly broken out above the descending trend line. So this one is showing more promise than just about everything else that I've looked at so far tonight. Here is Stellar Lumen, same pattern as everything else. Here is EOS, perhaps breaking out, not seeing the volume from there right now. Here is TRX, there's no pattern here. XVG, so this is Verge. Verge, same pattern as everything else. You know, it's just almost like everybody's just watching everybody else, looking around the room and seeing who's going to make the first move. Here is Substratum. Nice break above the descending trend line, but no volume behind it, so therefore no excitement. And I will finish out tonight's analysis of our portfolio coins by looking at VeChain, and VeChain is just not doing anything right now. Sometimes you can see what's going on here if you look out at the larger time frames. The larger time frames will show you what's going on. And this one's not been around for long enough to really show. But we can start to put things like fibs on here. And if we start this one all the way down at the bottom and go all the way to the top here, you can see that this is just a standard retracement. It has retraced maybe about a maximum of 50% of the coin's value. So this is very typically what we see. And what I prefer to see is that the price bounce at the 38.2. It can go to the 50%. This is technically not a fib. I've been corrected by mathematicians before that insist on precision, and they say that 50% is not a fib. Okay. And then sometimes you'll see the price go as deep as a 61.8% retracement and then bounce from there. Normally, this is sort of the line of death here. If it gets below the 61.8, then it's going to fill in the triangle, go all the way back down from whence it came, which in this case for VeChain would mean that it goes back down to 0. So we want to see this thing bounce and hold here at least a 50%, at the deepest the 61.8 for VeChain. All right, folks, that is the analysis report for tonight. Keep those ideas coming in. Thanks for listening. We'll see you tomorrow.